And there's a reason, because it's very, very organized. Even though it may look chaotic to people that are first time introduced to it, it is a market that is just a real pure market. It's really nice. You can clearly see the manipulations. Even in all, I mean, for instance, look how accurate this year has been for me. Talking about the S&P and calling the crash, the day before. Come on, it's predictable. It's very predictable. So I don't introduce this and just say, here's some extra fluff and filler. This is real stuff. This is real insight that you can go out and you can carve out an enormous career with what I'm showing you here, just in this video alone. The signatures that I'm showing you exist in all of markets, but when you rely on the SMT ideas with the things I'm teaching you in market structure and order flow, it just makes it very easy to see what the institutional traders are doing and even anticipate before they do it. Like you can see these guys talk. I'm looking at volume profiling, and I'm looking at the DOM, the depths of market, and I'm gonna do this and I'm gonna do that. All that stuff, okay, all that stuff is just gimmicks. There's no real anticipation of that. Like you have to look for a point of control, or all these things, and you got to weigh out how much you want to do at this level or that level. I don't need to do that. I know what levels should create an opportunity, because look, there's an imbalance right there. I don't need a volume chart to show me that. I don't need to see a volume bar be very small here to know that that wasn't a lot of trading there. It's a BISI, it's a buy side imbalance. I don't need anything over here on the vertical side of my chart to show me that that is an area to look at because of price. It was inefficiently offered. So what does it need to do? It needs to offer sell side. Think about what I just said. They're looking at bars over here that depict volume, and they're looking for relationships between the highest volume bar and the lowest volume bar and the point of control and all that stuff. And honestly, it's all gimmick. You're just taking the same things that's been applied to trend lines and divergence and indicators, and you're applying it to this over here and saying, okay, look at this. This right here is saying this. We've always had volume. This was always vertically down here. But to make it look like it's something new, let's put it over here. Well, you don't need that. You can be a visual trader and just say, okay, I see one candle. And this one candle painted in between a range between this candle's low and this candle's high. So there's something special about this candle. But what is it? It's easy. It closed up. So what did it do? It created a buy side imbalance. It only went up, and it went up in an area where only one little candle supports all of this price action, and finally it breaks down and closes right back to the candle that was down before this up candle was formed. So all of this green candle, think about it as a paint roller, okay? And you put paint on the wall, all the chart where it's white, that's the wall, and you apply the paint here to the wall going up, and then it keeps on going. Are you going to have a lot of paint on your roller still as you start painting up like that? No. So what does it need to do? It needs to come back down and fill in all those little pockets that where the paint didn't really efficiently be applied to the wall, where it was really thick here. It needs to come back down and offer what? The downstroke in that same little area. So that's the analogy I use with rebalancing. Okay, so the BISI, or buy side imbalance, every single up close candle that can be encapsulating a specific price range, the candle's high here, the candle's low here, that little area right in the middle, that has to be at some point in the future needs to be traded with a down candle. Every price range, every single price range on any market to be efficiently delivered and modeled for liquidity has to be offered on a buy side and sell side delivery, period. End of story. That's what makes markets go up and down. Now, you have internal range liquidity, which is what this is here, between this low and this high. But it also operates in the capacity of external range, between this range low and this high. And when you can see both sides of a liquidity pool like that, You have a strong liquidity pool that creates what? An explosive price action move. You have a range from here to here and a range from here to here. By itself means absolutely nothing. Sounds like hindsight gibberish. But in the mentorship core content, I teach you the idea of external range liquidity and internal range liquidity. These relative equal lows between this high and this low, or these lows, outside of that range below it, this would be external range liquidity. But it also is the low to high internal range liquidity. So it is a double barrel shotgun. You're getting a large pool of liquidity being tapped into, and that's what makes these moves extrapolate to the upside. Go back and look at your charts. When you can frame what I just said, and listen, go back and rewind the video a little bit and hear me say it again, because there's no plainer way for me to say it. I teach more of it in the core content, but when you have an overlap of both a area of liquidity where below old lows, it's external range and internal range liquidity, and then you see these extrapolated moves. Couple that with the SMT divergence that I showed here, you have a $1 million trading system. Just like that. Just like that. It's simple. It's very, very simple. But now imagine being your first day here, and some of you are just now starting, and you're hearing me say these things. You're like, what? Internal range, external range. Your head's swirling right now. Trust me when I tell you, the people that have been here up to month 5 or later, they're smiling because they understand what I'm saying. They understand the things I'm saying. The new folks that are coming in, you are experiencing the same thing that the other people and the charter members have experienced too. Like, okay, this is too much. I need you to answer this. I need you to answer that. You already have a laundry list of questions you want to email me. Don't. Write them in your study journal by topic. Do topical studies, okay? And literally, as you go through the core content, those questions get supplied to you in the form of answers. And everything you're wondering and worrying about right now, they are not imperative at this moment. There's other things that you need to learn. Trust me, I know how I'm doing, and I know I've done this with thousands and thousands of people, and the people that get it are the ones that submit. It ain't me going to you and answering every beckoning call that you give me in an email. Okay, it's not me pushing you away. It's not me saying that you're not important. It's me saying you subscribe to this and you're part of this community. You're going through the growing pains of learning how we communicate. And until you learn that language, which is completely all the way up to when you become a charter member, then you're able to be part of the community and you can interact with other people. But you will not learn anything unless you keep a study journal and then go into the charts and study the things I prompt you to. Look for these things, I'm telling you. The relative equal highs and equal lows lesson I gave you here tonight, and then incorporating external range and internal range liquidity and the SMT divergence with the index futures, it is a bombshell. It's beautiful. That's the secret recipe. That's your blue ribbon recipe for trading index futures. And you will literally destroy any of those guys on YouTube. Anybody out there running subscription-based signals, what I showed you here today beats the living hell out of all of them. They can't trade that way. They don't even see it. They don't even know that. Well, of course, now they're going to know it now. But it ain't going to change anything. It's not going to change anything. And these are just one or two things that I showed you in this video. There's dozens more that you're going to learn in core content, and there's dozens more beyond the charter level, content that I've already given. But you have to grow into what you're being introduced in the natural progression through the core content, and in growing in your expertise and understanding of what it is that you're learning. It's not enough just me talking about it. It's not enough me saying this is what it looks like. You got to go into the charts yourself and find these things, and you'll see. It's not me just going in cherry picking things. They're there all the time. It's like this all the time. And when I discovered this by studying hours and hours and hours of data every single day, after it happened, because I was working a job, I needed to know, was it like this before I started on November 5th, 1992? November 5th, 1992 at 9 p.m. in my aunt's family room, dark and dingy with wood paneling on the walls and one lamp with a 60-watt light bulb illuminating the first book I ever wasted money on. That was Ken Roberts' course that taught me nothing except for how to lose money. 50% my first trade. Just like that, gone. You can't rush into live money. But I looked at all the things I was learning. And in 1993, I was literally going and purchasing data that was decades before me. And I needed to see if what I'm finding, okay, am I seeing things that repeat even before I was born? And they're there. They're there in the agricultural markets. They're there in the metal markets. They're there in stocks. It's in the bond market. It's in commodities of any capacity. And now, with the emergence of crypto, I'm seeing these signatures appear there as well. But because it's such a new asset class, I'm not in a hurry to trade it, folks. Now, I know some of you in here do. Congratulations. You have more bravado than I do. I just don't understand it enough yet. When it has all the signatures that I see in all the asset classes that I've traded, then I will consider it, but I'm not considering it until I see it. And there's other things that you haven't learned yet that I'm looking for in price that crypto don't simply show me yet. Assets like the foreign exchange market, spot and or currency futures,